Welcome to August Trade. We're deep within the dog days of summer and the markets have slowed to a crawl. How's your trading going? Are you struggling to execute consistently or are you actually seeing some success? If you made a stack of money in July, then don't change a thing. But if you're struggling, a word of advice: slow down. In the markets, patience is a virtue. Often we get paid to wait, not to trade. Sometimes the best thing to do is to take things slow. Remember, the summer months in the Northern Hemisphere are a notoriously choppy time in the markets. There's nothing wrong with waiting until Labor Day before boosting your leverage and chasing the brass ring. All right, let's get down to business. Here are 3 premier events scheduled for the coming 5 days on the markets. We're going to begin our trading action Tuesday. The Tuesday session will be headlined by the Reserve Bank of Australia's interest rate decision. Last time out, the RBA chose to hold rates static instead of hiking by the expected 25 basis points. Don't be shocked if Philip Lowe and the RBA decide to go hawkish and boost the prime rate from 4.3.5% from 1.0. The Aussie will be front and center Tuesday as we look to cash in on post-RBA volatility. The key market is the Australian dollar, US dollar.
Okay, for Tuesday, it's going to be the Australian dollar, US dollar. Our analysis is going to be very simple, very simple. Right here, we have a weekly chart. We're going to use some Fibonacci retracements to identify a potential buying opportunity. As you can see, we had a nice spike low there, a nice, robust 2-week rally, and then we sort of had a 2-week sell-off. On the heels of this RBA announcement, we're going to be looking to go long potentially from somewhere right down here in this 66.58 area, 66.50 zone. So on the heels of the RBA, we may get an opportunity to buy that 78% retracement. Typically a fantastic level. The beauty of that is we can execute and keep our risk relatively small, only risking about 50 or 60 pips, stop loss beneath 66 flat. So that's what we're looking at for Tuesday's Australian dollar, US dollar.
Wednesday is going to be a slow day, sort of a throwaway day in the markets. Now, Thursday is a big day for the financial markets. The headliner, the Bank of England interest rate decision. At press time, it's a mystery what Governor Bailey and the BoE have planned for UK monetary policy. Many analysts believe the BoE will stand firm at 5%, while others champion another quarter-point rate hike. We'll just have to wait and see. One of the most active Forex pairs over the past month has been the Great Britain pound, Japanese yen. Upon the BoE vote, brace for volatility in this pair. For Thursday, the sterling will be in play, led by likely action in the guppy. Key market, Great Britain pound, Japanese yen.
Thursday session is going to be all about the BoE, and it's going to be all about the Great Britain pound. Right here, this is one of the more active Forex pairs that we've seen really out throughout the early summer and springtime months. You can see right here, Great Britain pound, Japanese yen. This is a weekly chart. Nice, real robust trend. You're outside of the upper Bollingers. Last few weeks, we've slowed down, and now we're on a pullback. In my view, I would much rather back the British pound than the Japanese yen right now. Right there, spike low to a spike high. And really, what do you have? You have some support zones. 38% at 177.78, 62% at 173.99, 174 flat, and then you've got 78% at 171.29. So right around that 171 quarter handle. Those are legitimate support zones going into the BoE. If we continue to see the Japanese yen pull back, maybe put on a little bit of strength and dig into this trend, we'll have an opportunity potentially to bid each one of those levels as they come our way, potentially right after or during the BoE.
It's the first Friday of August and time for the U.S. non-farm payrolls report. One of 2023's bright spots for the Fed and the U.S. economy has been the American labor market. However, NFP has been a bit of an enigma. Many times this year, we have seen major revisions to the NFP release suggesting that there is some ambiguity in the numbers reported by the U.S. Census Bureau in reality. Be on the lookout for another revision in this month's report. Key market, pretty much anything. For us, we're going to be looking at the U.S. 30.
Friday's session, all about U.S. NFP. We're going to see volatility across pretty much everything related to the U.S. dollar or U.S. equities. We'll even see some in crypto on the back of this big-time release. For me, it's going to be about the U.S. 30, and it's a very, very straightforward, simple process. What do you have right there? You've got the nice all-time highs right back there to last fall's big-time pullback, and since then, we really ground higher. A little bit of compression right around that 62% zone. Right here, 78% of that high to that low is 35,205. As long as we're above that, I'm bullish, looking to buy pullbacks. If we do fall beneath that and maybe get a daily close beneath that, then we can start talking about playing a short-term correction to the bear. So a lot going on Friday. NFP is the catalyst. I'm going to be watching the US 30 as being a potential mover and shaker for this key economic event.
When it comes to trading, sometimes less is more. Last week was an incredible slow news cycle, headlined by a very sluggish FOMC rate decision on Wednesday. Are we in for more of the same to open August? Certainly possible. Discipline and patience can help you prosper during the dog days of summer. Be sure that these are core principles for the week ahead. All right, it's quiz time. In what year did George Soros and the Quantum Fund attempt to crush the British pound sterling? Was it 1989, 1992, or 1995? The strategy resulted in a $1 billion profit for Soros. If you know the answer, leave it below. As always, trade well and we'll see you in the markets.